Hello everybody, welcome back. So a bit of a late start today, and I'm using my old Lenovo laptop because I'm out and about just seeing family down south. So what we're looking at today is first we'll start with the Dixie. Now, if you watched my video yesterday about inflation, you should more or less take away from that inflation is going to come down bit by bit overall. And all these FOMC meetings and CPI data reads and all this will be like completely forgotten about in a year to 18 months, allowing for, I suppose, the 4-year cycle to continue to reach its peak as we project it to, right? But until then, these events still continue and they may have some kind of effect on the market, but I would expect them to be non-events really, as we see inflation more or less is coming down bit by bit overall. Now, it has been a bit of a tick up recently because oil has ticked up, which has been basically fuel. It's not quite been priced into the food quite yet, but food, fuel, and anything that basically around that. I'm not really wanting to go into too much detail about that because I made that video about it yesterday, but I still don't believe that we're looking for higher CPI reads generally until we see oil break 83, and then obviously we can start to be a little more concerned that fuel will be priced on top of everything, which is how it usually works. So let's take these charts on face value. I know that Mr. Powell will be speaking today, which is why I thought I'd start with just a recap of that. But more or less, like I say, I think these things are at the moment non-events really. So long as oil's below 83, well, these sort of things should be non-events. Right, so this is Dixie on the weekly, approaching a 50 simple moving average on the weekly, which is also at the top of the Bollinger Band on the weekly. Now, it's a relatively bullish chart. You can see how we consolidated this entire time now, and we hit the 200 exponential moving average. Nice place for a bounce. You'd always be looking for that. So technically, it still is kind of bullish, but it has been sideways for a prolonged period of time, for the most part of this year, in fact. And although we are looking to print a new local high on this one, a rejection at this level is relatively likely, I would say, around 104.6, and we're sitting around 104.1 at the moment. So we might get a rejection around those areas, and it would be bullish to see a pullback and then a support around 102.8. That's your Bollinger Band Center with a whole range of moving averages, kind of spoilt for choice, really, and support above there. Breaking down below there, though, would be good, and you'd probably be looking to see further downside on that. But for the moment, we'll just expect a little bit higher, move up to this level, and then a pullback and see where that pullback comes down to. Like I say, closing on a weekly below 102.8. You'd expect continuation down, but for the moment, long story short, in summary, looking for a move up and then a pullback anyway, and then we'll see how far the pullback takes us, which should be good for everybody. So, Bitcoin, still looking at this as the overall setup, really. It's a bit of a lame looking chart here. But basically, a pullback and a bounce to roughly around 28,500 is going to be, like I say, the top target. This is going to be nothing more than a lower high. And this is going to be about as bullish as you can imagine it being, given the setup that we're given right now, which is nothing really other than a bit of bullish divergence on the daily. But we more or less gave a lot of it back yesterday. Now, thinking about the reasons why it was given back, I don't know if you pay attention to stocks, but one of the things that took place yesterday was a massive peak on Nvidia, which then got rejected around 500, and with that pulled back with a lot of other tech stocks. All the AI stocks pulled back. Everything was pulling back. So if the AI stocks start to pull back, Tesla starts to pull back, and Tesla has been one of the charts which has propped up the S&P and the Nasdaq. And so when you see those things pull back together, then it has a spiraling effect. And so yesterday, we saw a peak on Nvidia, then a pullback. Shorts probably stacking to the extreme on something like that because it is. It's one of those charts which has kind of gone crazy, really. Trying hard to navigate the top, and Captain Noobmaster highlighted a nice round figure of 500, and that's where the shorts have stacked and the bids have been sold. So we saw that in stocks, tech stocks, really, which has pulled the market back, and Bitcoin pulling back with that too. Now, if we think about what we see here on the 4-hourly, we are not looking particularly strong, I have to say. The MACD was trending up towards the 0 point. We did have some nice uptrends on the MACD, the RSI, and the money flow index, and we still kind of have that. It's been sideways and up as far as lows are concerned. So we can't really get massively bullish on what we see until we start to reclaim some of these areas. Really, we need to get back above at least the 26,500 area, which is your 50 exponential. That would be great, because that's where we got rejected from a couple of days back now. And if we get a back above there, then it does look like we're likely to move up into the 28,000s and probably find a peak around 28,500 or so, where, like I say, I showed on the video yesterday morning all the reasons why that would be a significant area to pull back from. But until then, slow and steady, basically sideways to the max. Difficult to really pinpoint a direction, especially when stocks have been such a major turning point in the market's behavior, in the crypto market's behavior yesterday. And like I say, depending on how those stocks perform today and close, which I'm not particularly hopeful about, really, because I have been looking for stocks to peak anyway and consolidate just naturally. Maybe this would be the catalyst for that. So Nvidia then pulling back all the tech stocks, especially ones related to AI, really. So we saw a bad day for all those guys, and through association with Nasdaq and S&P, Bitcoin has pulled back. We see altcoins getting, I suppose, to an extent, wrecked. So more or less, it is the same analysis as yesterday. I'll be looking for a breakdown area of around 25,850, we'll call it. Closures below there. We'll probably have continuation down to the next major level. These wicks could be telling for that. So come anywhere down to these previous wicks. We're talking 25,003, maybe 28,150. See if we can hold those levels. If we lose those areas, then yeah, we're going to continue to trend down as the chart at the moment does suggest. Invalidation of that, though, would be, like I say, closures above this level, 26,600. Breaking above there, closing above there on a 4-hourly should have enough continuation to take us back up to this level. Like I say, right now, it's your guess is as good as mine, really. There is no real trade to be made at this level. There is only trades to be made once confirmation of either a break lower or a break higher. But personally, based on what I was saying yesterday morning, it's more likely to break to the out ever so slightly. Not enough for me to go futures trading on it, but it is more likely to break out than down based on its own merit. But you can't trade all charts based on their own merit, especially altcoins. Bitcoin maybe a little bit more, but recently not so much. And again, after the Nvidia pullback yesterday, and then AI and tech stocks coming down yesterday, maybe that's enough to hinder Bitcoin's performance to actually even get back to this level. Like I say, I would be very interested in taking positions, leveraged futures positions above 26,600, and I would probably also be looking to continue further downside and maybe even shorts if we see a new low formed on a wick basis. But personally, I'm not into really shorting this. The only place I would be comfortable enough shorting from would be up these other areas, 28,002, where the 200 exponential is on the 4-hourly, maybe a little higher, maybe a short around 28,005, where we're expecting a peak to form. But personally, I wouldn't be looking to short lower. I'd only be looking to short if we make our way up to the top. So longs above this level, shorts at this level. This is the kind of range I'm looking to play within, and that's if I have the time. Because again, I'm not at home at the moment. I'm out and about with the family, so there's a very unlikely chance I'll be able to even access the charts to make a successful trade, because I've got cousins running around me, and not cousins, nephews and nieces running around me. It's not a trading environment. Anyway, I'll leave with you there. Not much more to say on it. It is Friday, so wait for the close, see what happens to the Dixie, and obviously see where Bitcoin closes on the 4-hourlies for continuation up. But generally speaking, I'm still looking for a lower high on this one. The peak, if anything, is going to be no higher than 28,500. If we break from there, then it changes the story altogether. For the moment, I just don't think the market's quite set up for continuation to new local highs at this point in time. I think they're probably more likely to want to consolidate, and the only winners really would be like Dixie and probably gold and maybe some mining stocks. Right, I'll leave it with you there. Thank you for watching, guys. Hope you have a nice day. Take it easy.